Major events like coronavirus can derail bull runs very, very quickly. Therefore, it makes sense to hedge your instruments, take diversified risk. So if I were to ask you one single concept that you absolutely need to know to make money in the stock market, what that concept would be? That concept is understanding the concept of bull run. If you understand what bull run is, how to manage bull run and how to invest in a bull run market, you would make massive amount of money in the stock markets. Through a series of 2 videos, the first one being today and the next one being tomorrow, I'll show you categorically how to utilize the concept of bull run to make money in the stock markets. This is going to be a slightly longer video because I'm going to explain you things in a very fundamental manner. So please take notes and please give it a thumbs up because it would motivate me to put in adequate research to make more such videos. So first and foremost, let us try to understand what is the meaning of bull run. In simple words, bull run means that when the share market correction has ended and the recovery phase has started, that period of recovery is called as the bull run. Let's understand this via an example. So when 2020 coronavirus happened, when the first instance of coronavirus happened in India, the share market tanked from 12,500 Nifty level to 7,600. So approximately there was a 45% correction in the stock market. Now when this depressing phase ended and when this recovery phase started, this period is called as bull run and we are still in that phase. Now there is no typical definition of a bull run, but typically what it means is that when 20% significant corrections have happened in the bull market and there is a 20% recovery, post that period is called as the bull run period. Now this is the theoretical definition and I know this is boring, but let me show you the magic of bull run. Now let me show you the power of bull run. So for this, let me go into my small case. So I made a small purchase back in March of 2020 just for juxtaposition and comparison perspective that how do I invest vis-a-vis other mutual fund managers in small case invest. So I made a small case investment in an instrument called as low risk smart beta. So this order was placed on March 9, 2020 and let's look at the current value of that particular purchase. My portfolio has gone up from 43,000 approximately to 63,000 in a matter of approximately a year, which gives me a total return of 49.45%. So when the bull run is happening and you end up making investments, the returns are insane. So on my portfolio, I have ended up making approximately 100% returns. So the idea of bull run is very, very powerful, that if you can identify what a bull run is and if you can play your cards right, you have the power to become super wealthy in that bull run itself. So now let me structure this video into 3 parts. One, I will tell you how to identify a bull run, what are some of the parameters or trends that you need to keep a look at and be on a lookout for to identify the right time the bull run is happening. Number 2, you must understand what to do in a bull run market when you witness and understand that hey, bull run market is happening. What is it that you should be doing? Third, let me answer till what point is this bull run going to continue. So let me jump into the Nifty chart and help you identify where in the past also bull runs have happened and what has happened in those bull runs. So let's talk about the most recent bull run which happened somewhere in the March of 2020, as you can see from here. Here the stock price is corrected by approximately 46%, right? So the Nifty fell from approximately 12,500 levels to 7,600 levels, right? As you can see from this chart. So this clearly indicates that the share market tanked massively, right? It tanked massively. And after that, what happened, right? The share market started running, right? And it has given up to 100% return, right? So has this bull run ended? The short answer is no. This bull run has not ended. In fact, my argument would be that this bull run has just started. And I will explain you subsequently in this video why am I saying it. But jumping back, let us look at some of the previous bull runs and what has happened in those bull runs. So if you take a look at 2008, another bull run had happened at that time. What happened in 2008 was, we all know that the financial crisis happened in the US and the entire world collapsed in a way. The financial systems across the world collapsed, due to which the stock prices witnessed a major correction. So here again, the stock prices fell in India approximately from 6,400 levels to somewhere around, as you can see, to like 2,200 levels. This was again a very deep correction. And again, after this, what happened, right? If you take a look at this entire trend line, we were somewhat in a bull run that in another 10 odd years, 10 to 12 years time, how much money did we make? If you would have invested your money at approximately 2,200 levels, the stock market actually ended up hitting 12,000 levels, right? So that's approximately 5.5 times the money. Now, of course, it is very difficult to predict what would be the depth. What would be the depth here? To what point would the stock market fall? But the point here is very simple, that if you would have identified that, hey, deep corrections have happened, let me invest my money in any part of this curve here, right? At any part of this curve here, you would have still made a lot of money, right? So that is the power of understanding the bull run. So now let me take you through some of the key trends and factors that you need to keep in mind that act as an indicator whether the bull run is happening or not. There are 3 indicators that indicate that the bull run is about to happen or the bull run is happening. The first indicator is the unemployment indicator. Whenever the bull run starts or is about to start, there is significant spike in the unemployment rate. Now I will take you through the data of US unemployment, and I'll explain you why I'm considering US unemployment in a minute. And I will show you that how, by using this as a technical parameter, you can actually estimate whether the bull run is going to happen or not. So here you can see this clear spike, right? This indicates that the unemployment rate has gone up massively, right, in the US. This is, can you guess what time this is? This is the March of 2020, right? This is when the unemployment was at its peak, right? Whenever such a peak is created, it indicates that the bull run is about to start. So people who invested insane amount of money in the stock market in the March of 2020, me including, we ended up making a lot of money in the stock markets because we understood that this was one of the fundamental principles. Now you can check this again. Now this data is for approximately 2008-2009 levels. Now again, the unemployment was at its peak, and if you would have put in your money in 2009 in the stock market, there was again a massive bull run that happened up until 2020, as I showed you from the previous graph. So let me take you again to that graph. If you would have invested your money in 2009 in the stock market at any part of this curve, you would have taken advantage of this entire bull run that took from 2009 to 2020 approximately. Now you might ask me a very fundamental question that, hey Akshat, why are you looking at the unemployment rate of the US economy? Why not Indian economy? So first and foremost reason is that majority of the jobs in the US are organized. So it's very easy to track the job data in the US. That's point one. In India, that is not the case because majority of the jobs are unorganized and the data is not reliable. So that is point number one, why I am considering the US data. The second reason is that India and US stock markets are intricately linked. They are very, 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 very strongly linked. Let me give you a very simple explanation. Why is that the case? So I am onto my whiteboard and I will just quickly draw some diagram and graph here. So what I'll do here is that let's assume that this is the US economy and this is the Indian economy. Now whenever any type of financial crisis hits, for example, let's assume 2008 financial crisis, there will be massive panic here. Literally 2008 financial crisis actually originated from the US, right? This was the point of origination of the 2008 financial crisis, right? But it hit the Indian markets very, 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 very deeply. Now, why is that? The answer is FIIs, right? So, foreign institutional investors pour in a lot of money not only in India, but they pour a lot of money in Singapore, they pour a lot of money in Australia, they pour a lot of money in Southeast Asia, right? So, these FII pull out a lot of money all across the globe when any kind of systemic world impacting challenge happens. Be it coronavirus, be it 2008 financial crisis. This is precisely the reason why the world markets are interlinked. It does not happen this way that, hey, India is isolated from the world or the US is isolated from the world. In fact, major economies like US, Europe, what ends up happening there is that if there is any kind of major financial crisis in any developed market, FIIs will pull so much money out of the developed market that the stock markets of these developing nations will face a major thrashing. Now, this is precisely what happened in 2008 also, that FIIs pulled a lot of money out of the Indian market. This happened in 2020 also, when FIIs pulled out a lot of money from the Indian market. The second indicator of a bull market is the average true range and Williams percentage R return. Now, please don't worry about the technicalities. I will actually show you how to implement these technical parameters, but these are great indicators to indicate that the bull market run is about to happen or is already happening. So, let's go to the Nifty 50 chart and let's try to put these functional studies in place. So I will type out average true range and then I will put Williams percentage R as my second study. Now let me delete this. Okay, so essentially the indicator of a bull market is, and these are leading parameters. So what happens is that this happens before the market actually crashes, right? So all the charts and graphs that you're seeing. So let me present a very simplified explanation here. So let's start with 2020 crisis. Now there are two things that need to happen simultaneously. One is that a peak needs to be created for the ATR, right? Now this is a peak, right? As you can see that, hey, this was a stable line and then suddenly some peak got created. And simultaneously, the percentage R should fall, right? So these two events should happen simultaneously. And when did these two events happen? This happened right here, right? This is what technical indicators indicate. Now let's look at it in 2008, whether this happened or not. Again, everything was going fine, it suddenly increased and hey, here is the peak. Here is where the peak got created. Now, does this happen on the percentage R again? It does, right? When this happens, these two events simultaneously happen, it indicates that, hey, this is the bottoming out of the market. Now, of course, you can't predict the market to the absolute day or absolute week, but this gives a very good general approximation that, hey, now the markets are somewhat bottoming out. Now, a lot of people would make the argument that, hey, Akshat, you know what? Markets are overvalued, the PE is very high, it will fall to 10,000, it will fall to 7,000. No such thing is going to happen, at least in my understanding as per the technical indicators. The markets have actually bottomed out and we have started the bull run already. Now third and the most interesting way to identify that we are actually in a bull run is to analyze how the news events are impacting the stock markets. Now, if negative news is not impacting the stock market, that is, that due to a negative news, the stock markets are not falling down, then it indicates that we are actually in a bull run. Now, let me take you to the Nifty chart and let me try to prove this point to you that the negative news is not impacting the stock market at all. So, let's look at the Nifty 50 chart here and let us look at the daily candle. And let me open the 6-month window here, right? So, this is, okay, just give me a second. Okay, so I'm looking at this. Okay, so if you look at the March data, so this is where the March series starts. Now, stock market was somewhere here, right? It was at around 14,500 levels, right? Very, very clearly. Now, this is where the second wave of coronavirus happened. So many deaths, unfortunately, were happening in India. Every day, you used to read that the government is unable to take care of the crisis. So many people, unfortunately, are losing their lives. So many people are losing their savings. Despite any negative news, tell me how much did the stock market fall by? Very minuscule amount, right? Hardly. Till the time this entire wave existed, the second wave, it's still going on, but it has subsided, thankfully. The stock market did not break, right? This is a clear telltale sign that we are in a bull run, right? The bad news is not impacting the stock market. When such a situation arises, it means that we are in a very strong bull run. And that is precisely what happened. Once a little bit of recovery started with coronavirus, the bull run really took off. Now, you might ask me at this stage that, hey, Akshat, can you please explain why is it that the economy is going down so much, but the stock markets are going up so much, right? How is this fair, number one, and how is this justifiable, right? This is a very interesting question, and you need to understand that stock markets are present value of future cash flows of companies. For example, when you buy the stock of, let's say, Reliance, right? You are buying the stock today, but the stock price currently indicates the potential of Reliance, of the amount of money it is expected to make, the cash flow of that particular thing, right? So let me explain it via a simpler example here. So let's say that we are looking at Reliance. Now next year it is expected to make 2022, let's say $5 billion, right? That is the expectation. Stock markets is an expectation games. In 2023, if analysts predict it is going to make $10 billion, that's an expectation. Now, if any unfortunate event happens, for example, coronavirus, these estimates change. Instead of $5 billion, this will become $2.5 billion. This will become half of that, right? So the expectation changes, therefore the stock prices also falls off. But during the second wave, the world was much more prepared to deal with the coronavirus, to actually estimate the impact that it might have on businesses. Therefore, the stock market did not fall so much. So essentially, economy as you see it, it indicates the current reality of things. But stock market is a future prediction of cash flows of different companies. So just to quickly summarize, a bull run is indicated, number one, by the unemployment rate. If it is peaking, it might indicate that we are in the midst of a bull run. Number two, you need to take a look at the percentage William R return and the average true range. And third and finally, you must take a look at that how the negative news are consumed in the stock market. Now, if you like this explanation, please give it a thumbs up and please like this video. I would really request you to like this video because it would indicate to me that you value this type of content and I would continue to make such videos. Now moving on to part 2, that now if you have identified that the bull run is happening, what should you do in it? Now the obvious answer is that you should take truckload of money and invest in the stock market. Yes, that is precisely what even I did, and I would continue to do whenever I witness any type of a bull run. But you can't invest money in a blind manner. What do I mean by that is that it's not as if that you can randomly invest your money in a random stock and you will end up becoming a millionaire. No, that would not happen. You need to be strategic, careful and precise in terms of the investment that you make. Now, in a bull run, you must be very careful of how much returns you expect to make, because higher the returns, higher the risk. That is a very fundamental concept of finance. So you must be very, very careful as to what is your goal. For example, my goal is to make 15 to 20% returns each year, because I have explained this concept of 15, 15, 15 multiple times on this channel, that if you invest 15,000 for a period of 15 years at a rate of return of 15%, you end up making 1 CR. Right? So I invest with the goal of making 15 to 20% returns only. So therefore I hedge my bets. So accordingly, you must identify what is the return that will make you happy. The more is your expected return, the more risk you will have to take. However, these are some of the points that an average investor can follow. Number 1, you must invest less in debt. What do I mean by that? There are essentially 2 types of instruments. One is equity instruments and one are debt instruments. Equity is direct stocks and debt is the kind of loan that you're giving out to a company. Now debt is less risky. Now in a bull run, 2 things happen. One is that the rate of inflation or the inflation rate actually goes up. Therefore, the return on FD or any kind of debt will go down. Therefore, investing in debt is a losing bet. That's point 1. Number 2, in a bull run, when the inflation is happening, equity usually goes up. So therefore, you should allocate your portfolio more in equity compared to debt. So that is point 1. Now, if you're someone who is just getting started in the stock market and you don't know how investing works and you don't have time to research on stocks and do fundamental and technical analysis, you must identify good equity and risk hedging instruments. So I was taking a look at some of the small cases and I would recommend you few of the small cases from here. For example, equity and gold. Now this particular instrument of equity and gold, this seems good to me because it has low volatility. If you are a first time investor or if you have just started your investment journey, this might be a great instrument for you from that perspective, because gold actually hedges your bet in a growing market and equity actually grows your wealth. So this has a component of both hedging your risk in terms of having gold in your portfolio and investing in good equities. So I would highly recommend investing in such a small case. Now in a bull market, the second strategy that I would advise is that invest in firms who can grow their brands and increase their prices at a rate which is higher than the inflation. So let me break this statement down for you. So let's assume that in a bull market, when the inflation usually catches up, as it is happening currently, that the inflation is on a higher side. I will link a video somewhere here and you can watch that entire video on inflation. Usually what happens is that in a bull market, the inflation goes up. Now if the inflation, hypothetically, let's assume that it has gone up to 6%. And if the firm is able to increase the prices of its product to 10%, then the firm is making money. This is called as the pricing power that a particular company commands. A lot of companies are able to do that. For example, Apple computers, they are able to increase their prices every year by 8, 10, 20% easily, right? So even if the inflation is 10% or 15%, they are able to survive and grow their free cash flows every year. So the bottom line being, you must be able to identify firms that have great brand and therefore a great pricing power. Now for this, I'll go to the small case and I'll try to identify firms in terms of their brand value. Now let me take a look at companies that command great brand value. So these are companies that own India's everyday brands, top consumer favorites. So let me take a look at the stocks and weights, right? So Asian Paints, it is a company that can actually grow its brand and can command higher prices, which will be higher than the inflation. Similarly, Bajaj Auto, iShare, all are great companies. Dabur has a great brand name. HDFC has a great brand name. HUL, excellent products. All these companies, Titan, Mahindra and Mahindra, these are the type of companies that can actually, in a bull run, command greater prices for their goods and would be able to survive the inflation. So this is my second tip, that identify strong brands and make investments in it. Now my third and final tip is that you should go sector specific. You must understand that what sectors are going to perform better in a bull run and what sectors are going to fail in a bull run. Just as an example, when 2020 coronavirus problem hit, you can notice that majority of the finance stocks were the first to go down. For example, take a look at the fall of Bajaj Finance. It fell from 4,800 to 2,000 levels. That was the sharp fall despite Bajaj Finance being such a strong company. What essentially happens in any crash is that the finance stocks are the first to fall. Subsequently, when the bull run happens, finance stocks are usually the first to recover and they recover by a lot, right? So if you take a look at Bajaj Finance now, it is trading somewhere around 56-5700 levels as of June 2021. So the point I'm trying to tell you is that there are certain sectors which will grow due to bull run, and then there will be certain sectors which will not grow in a bull run. So in short, when you have identified when the bull run is happening, you must make sure that you are making investments. Number two, you must be smart enough to use equity as a major basis for making investment if you want your money to grow, and be well diversified in that equity portfolio of yours, and identify the right sectors and specific strategies to make money in it. Now your question would be that, hey Akshat, till what point do you estimate that the bull run is going to continue? Now no one can predict it, including me, including any major investor. We can't predict that. But historically speaking, the bull runs usually last from 5 to 10 year period. That is the usual range in which the past bull runs have continued. So I'm hoping that it would continue this time as well. Major events like coronavirus can derail bull runs very, very quickly. Therefore, it makes sense to hedge your instruments, take diversified risks. That is the reason why I would leave you with some very specific thoughts. Number one, please follow risk diversification. If you are investing in finance stocks, it's completely okay, but don't go and put all your money in one single stock. Number two, have an allocation of debt versus equity. Don't go and invest all your money in equity. Allocate your portfolio in such a way that it is diversified. For example, invest your little bit of money in equities, invest little bit in debt, invest little bit in commodities. So be well diversified. That is the mantra. Number three, keep a track of specific indicators. Learn investing. That is very, very important. Unless you learn investing, you will not be able to make money in the bull run, and you might get completely wiped out in a coronavirus like situation. So if you found the content to be useful, please give it a thumbs up and give it a like and comment. That would mean a lot to me, and I would continue to make similar videos. Tomorrow I'm going to show you specifically how I have used the bull run to make investments in specific stocks and why have I picked those stocks.